Question number 12. A real estate transaction will close on November 15. The seller owns the day of closing and has already paid the property taxes of $7,240 for the calendar year. On the closing statement, the buyer will be, letter A, debited $603. Letter B, credited $603. Letter C, debited $905. Letter D, credited $905. Question number 12. A real estate transaction will close on November 15. The seller owns the day of closing and has already paid the property taxes of $7,240 for the calendar year. On the closing statement, the buyer will be, and the answer is, letter C, debited $905. So basically the way that you approach these is you look to see who owns the day of the closing and what date do we close. Typically the test will tell you, use 360 day or use 365 days. So basically that's going to reference that. And in this particular case, what they did was they simply went in, they looked at the entire property taxes and has already paid the property taxes of $7,240 for the calendar year. On the closing statement, well, that means that the seller has paid all of the real estate taxes, up till this point for the entire year. So the seller is going to need to be credited that amount because they prepaid all of the taxes for the remaining part of the year. Remember, the buyer is taking ownership as of November 15th, even though the seller owns the day of closing. That just helps with that 1 day worth of number for the taxes owed, and you come up with a debited side. So the buyer will be debited, letter C, $905.